Hey guys, so now we're going to do a deep dive into one of our available turnkey rental properties. And the goal is for you guys to pick up a tip or a trick that'll help you with your future analysis of single family rental properties. So let's dive in. All right. So first things first, always go to memphisinvestmentproperties.net. Click the properties tab in the top right hand corner. You'll type in your information and hopefully it autofills with cookies, but if it doesn't save, that's okay. Just type in the information again, and that'll give you full access to our inventory. So every single property that we have is on this website here. We don't hold any properties back. We put the properties here first. And as you can see, we don't have a lot of properties right now, and we haven't for a while. And that's just because the demand is so high. We're still doing about 25 houses a month. Just instead of them selling in weeks, they're now selling in hours or days. So the property here actually on the right on Kingsman Drive just sold. So I need to take that down after this video. So what we're going to do now is take a deep dive into 3475 Chowning Road. So one of the first things I like to do is click on the actual address because that'll take you to a direct link to the Google Maps. And then that allows you to zoom all the way out so you can see just where within the MSA of Memphis is this property here. So we as a company, we invest in certain neighborhoods throughout the entire metropolitan statistical area of Memphis, and our office is conveniently located in the middle of town so we can get to all of our properties quickly. So this property here is going to be on the northeast side of town. We invest all through the north side, whether that's Fraser as a C-class neighborhood, Raleigh is predominantly a B-class, and if you're on the east side of Raleigh, it moves closer towards B+, because once you get into Bartlett, Tennessee, true Bartlett, that's going to move into A- all the way up to A+, and what we call dollar signs, to where it's just too expensive to own rental properties because they don't even cash flow. So one thing we really like about this home here is that it's on the cusp of Bartlett, Tennessee. It's right next to Bartlett. So these residents can go into Bartlett if they need a job, if they would like to just have some fun on the weekend, right? Retail shopping, all those wonderful things. So now I like to zoom in a little bit more to see exactly where the property is located and what it's going to look like via the street view. That is nice that this is even available now, so you can kind of drive around and see where the property is located. I always recommend you look up here at the top because it'll actually, and you click street view because it'll tell you the date that the picture was taken. So it's nice to make sure that you're always looking at 2019, so you can get a pretty good example and a pretty good feel for the overall layout of the location. So it's nice to just drive the Google car around to see the different neighbors, see what you're going to be working with here. So beautiful street. We'll dive into Chowning Road. So as this loads, you can see, always like to look at the yards, nice, clean cut, trimmed. You don't have 1,000 cars sitting on the road either. And just looks like a clean, quiet, wonderful, safe neighborhood. So now we can dive back. Holy cow, the sun's really bright. Sorry about that. So now what I want you guys to know is just from a high level view, we're going to put the price, the rent, the cash on cash, the total 1-year return, assuming a 20% down mortgage, and then the neighborhood score as a B+. So I like to just take that one step deeper, and what you can do is click here. So the bottom left of every photo, that's going to take you to the Google Drive. Now, this Google Drive, we call it our vault because it's going to have all the necessary information that you need to make an educated decision on whether or not you like the property. So one of the foremost things to look at is the scope of work. Real easy. Double click here. What we want to make sure that we put front and center in front of for you guys to view is what we're going to do to the major items: the roof, the mechanicals, the floors, the appliances, because those are going to make up the majority of any renovation. And those are also the easiest items for people to hide. Because if you have a 20-year-old roof, you don't have to replace it, right? That could last a few more years, but we want to let you know that it's our goal here to replace those. So as you can see, roof, new. So if it says new, that means we as a company, we're going to install a brand new roof. Every single one of our roofs are going to be a 30-year architectural shingle roof. So you've got the two different types of roof. You've got the 3-tab. Those are where the shingles lay flat, kind of looks like brick. And then you have the architectural shingle where the shingles actually lay on top of each other. So those roofs cost more money and they last longer. And since we do such high volume, we can get those at a great discount and put in higher quality materials that'll work better for you in the long run. So we also do full roof tear-offs as well. So we're not going to do a layover because that layover is not going to last very long. We're going to rip off all the old layers. We're going to repair or replace any rotted decking. We're going to put new felt down and a new 30-year architectural shingle roof. So we take that mindset and that philosophy all the way through with our renovations. So we're going to have a brand new heating, central air conditioner. Every single one of our houses is going to have a central AC. You're not going to have to worry about window units. You may see some window units on the pre-renovation photos, but we're going to rip those out and make sure that there's central heat and air in every house. Then we're also going to install a brand new water heater. For the flooring, hard surface. That is just one of our mottos and something that we truly believe in just because of the math. It's going to be a little bit more expensive day one to put in hard surface flooring like luxury vinyl plank and tile, but it's going to be a better investment for you because that hard surface is going to be able to last through multiple turnovers. Now, some folks think that carpet will suffice, and we just disagree. We think that the carpet is just, no one wants to live in a house with stinky old carpet, right? So what we also like about our LVP floors is we can pop up one individual shingle if it gets damaged. They're also waterproof floors as well, which is nice to see. So the only time you should expect to see carpet on our house is if for some reason we buy a house and there's brand new carpet from the old owner right there that they just put in, but that's very, very rare, less than 1%. And then sometimes there's 2-story houses as well. So if there is a 2-story house, then we'll always put carpet on the stairs and upstairs because if you have hard surface on the second floor and people are walking around, it's just really loud and annoying on the main floor. So those are the exceptions to the rule. So then appliances. It's going to be pretty standard to see dishwasher, yes. Range, no. Vent-a-hood, yes. Refrigerator, no. And the reason for that, people say, well, what about the other appliances, right? Does the owner have to supply those and pay for those? And the answer is it depends on the neighborhood that you're in. And fortunately here for our properties, whether that's a C class, B class, and almost every single one of our A class homes, the tenants are responsible to bring their own appliances. So I'll say it again. The tenants are responsible to bring their own appliances. Really anything under $1,500 in rent, that's going to be the case. So it's really a blessing. I'm from Colorado originally, and that was a huge shock to me. But then once you think about it, well, those items get used daily. They have a higher chance of breaking, which is going to increase your expenses. But here in Memphis, you don't have to worry about that because when the tenants bring that refrigerator and it breaks, it's their responsibility to fix. So we are going to install a dishwasher just because it's kind of difficult to install and we want to do it right so there's no leaks. And then also a vent-a-hood goes over the stove. It's just inexpensive and we just put those in new every time. So below here below the photo on the right-hand side is going to be our estimated completion date with the renovation. So every time you see a brand new property, it's going to say under construction because it's going to take us about 30 to 45 days to finish that renovation. So don't worry, you're not going to actually own the house until the renovation's 100% done and you're 100% satisfied with the quality of the work that we do through a home inspection and an appraisal. So I recommend you read all these little mini frequently asked questions. It'll just really give you the full picture of working with us. So then the next thing I like to take a look at is going to be the pro forma. So this pro forma, we like to under promise and over deliver. And we also like to give you the full picture. So every single investor, turnkey provider is going to have a different pro forma. So what we recommend you guys do is you take one pro forma and you type in every other house onto that same pro forma, whether that's in different markets. Just make sure you're using the same pro forma. It doesn't matter if it's our pro forma. I'm happy to send you the Excel spreadsheet so you can use ours or someone else's pro forma, because you can have the same house, and depending on the way the pro forma is, your cash on cash return could be 10% or 18%. Right. And so we just want to make sure you're getting the full picture and also comparing investments apples to apples. So for our pro forma here, we're very blessed since we own the property management company. We can use real data like our vacancy report, our average maintenance. We get to use real data for the interest rates, closing costs. Our insurance is a direct quote. So let's dive into the pro forma here. So Chowning, 126,900, 127,000. It's located in 38135. So from an area and a location standpoint, what we like about this home and the outliers is that 38135 is normally Bartlett. We can go back to the map here. So it's normally Bartlett, Tennessee, which is normally an A-class neighborhood. If this was actually in true Bartlett, it would be probably $30,000 to $50,000 more. And the reason being is because Bartlett has amazing public schools. So this home here, it's in the same zip code. So the tenants can, brag and say, hey, I live in Bartlett. It's just that their kids, assuming they have any, wouldn't go to Bartlett school. So that's why the home price is lower. And that's why the cash on cash return is much higher. Because if this was actually in true Bartlett, it'd be worth more, and the cash on cash return would be significantly less, about 2 percentage points, if not 3 percentage points less. So love the location. It's a 3-bedroom. That's standard for us. Almost all our houses are 3 bedrooms and a 2-bath. That's just depends on the neighborhood. We do 1 bath, bath and a half, 2 bath. It really just depends on the location and the rent. This property here does not have a covered parking or a garage, and that's why we have a lower rent and a lower sales price to accommodate. So it's built in 1989, which is kind of an outlier for us. Our average house is built in the 60s and 70s. So at the end of the day, anytime you can get a newer house, it's always better in our opinion. So parking D, that stands for driveway, we talked about before, and then it's in a B+ neighborhood. So our neighborhood is based on the percentage of homeowners to renters. So it's right around the average here for Memphis, Tennessee. So the target rent on this property is $1,075. This is going to be monthly. We put folks on a 2-year lease with a 4% rental increase between year 1 and year 2. Then we take out $43 for vacancy losses. So we're not, as a company, we're not physically holding on to that money. It's your money. We just recommend that you take that $43 and instead of putting it in your profit account, you put it into your reserve checking account. So this is just what we recommend you do. I actually just filmed another video on the flow of this rent and how that actually hits your account. So I recommend you check that out too. So now that'll leave you with your operating income of $1,032. So that's your income. Now you want to look at your expenses. First, you're going to have the property management fee, $83. That's 8% of gross collected rents. Property taxes, $112 a month. Our insurance, $36. That's a direct quote from our master policy, which is absolutely incredible. It's through Lipscomb and Pitts. If you want to look into them, they're a massive player here in the Mid-South. And what's great about this policy is it's just like as if you have a W-2 job and you're on a group health insurance plan. It's a no-brainer. It's better coverage for less premium. It's the exact same philosophy with our insurance program here. It's more coverage. You actually have $3 million in liability coverage. So it really helps with your asset protection. Tangent here, but our attorneys actually, the ones that set up LLCs for investors, they say this insurance program is so good that they don't even recommend it. So back to this. And then it's, excuse me, it's also about 30 to 40% less in annual premium than a State Farm if you were to just get one individual policy. And since we have about under 3,000 properties on this plan, that's why we're able to get the discount. So then we also have repairs, $54. Once again, this is your money. It goes to you. We just recommend you hold back $54 a month for future repairs because we know they're going to happen. And what's also great is that since these are turnkey rental properties, you can expect to have virtually no maintenance in the first year. One, because we give a 1-year construction warranty, and two, because we just did about on average a $30,000 renovation. So even with that said, we want you to, and we recommend you put that off every single month for the day that the tenant does move out. So you don't have to stress about it. HOAs, 0. It's very rarely that any of our properties are in an HOA. Some A-class properties are, and they're normally about $15 to $20 a month. But that's very rare. Once again, that's an exception. So those are your operating expenses. Now it's going to take us to the cash flow section. So your net operating income, your operating income minus your operating expenses, is going to be $747. Then that's going to take you to what your cap rate is. So the cap rate here is a 7.7%. That's also assuming you bought the property all cash. It's your net operating income divided by your purchase price. Most folks use the cap rate on multifamily investments, but it also can help with single families as well. So now, since a lot of our investors are going to get a mortgage, we estimate that your monthly mortgage principal and interest is going to be about $500. On the right-hand side here, this is more details about the assumptions. This is, once again, just a pro forma. Everyone's situation is different. We highly recommend that you get pre-approved, get your quotes to make it exact. So this is assuming 20% down, 30-year fixed conventional loan at 4.25% interest. And once you take that into account, all of those items, you're going to have your net cash flow of $248 a month. Pretty incredible. But now we want to look at, is that good or is that bad, right? This means absolutely nothing unless you also look at what you had to spend or invest to get the property. And that's where the cash on cash return comes into play. So that's going to be your annual cash flow divided by your initial cash invested. Now, this is where a lot of folks will skew their pro forma, is because initial cash invested is your down payment, 20%, plus closing costs. Some folks don't believe that you have to add closing costs, when in reality, that's just inflating their numbers. So we do include closing costs. If you don't want to, you don't have to. But if you do include closing costs, then your cash on cash return is 10.4%, which is incredible. That's the full picture. Now we're going to look at property appreciation, 11.1%. Don't worry, that's not the actual appreciation. That's the return on investment. You see here, percent ROI that you're going to get from the property appreciation. So this is only assuming a 2.5% appreciation. That is conservative because that is the actual appreciation in Memphis over the last 30 years. Over the last 10 years, it's been 3%. And since 2016, it's been just under 5%. So if you want to go off the numbers since 2016, this should be doubled. But we just like to be conservative, under promise and over deliver. So 11.1% is your actual ROI, assuming a 2.5% appreciation. Then you have your mortgage principal reduction, which is your tenants paying your mortgage, and the mortgage is consisted of your principal and interest. Interest is the fee. The principal is actually just it's kind of just like it's going into your checking account. It's just locked into the house. So that will be increasing your net worth, and that's why it's a return. And then also the tax savings ROI. Now, this can differ drastically amongst investors, so we highly recommend you reach out to your CPA. We have referrals for those if you'd like. But what we calculated here is your net cash flow multiplied by a 33% tax bracket, which is going to be a $981 tax savings. So instead of spending that money and paying that money to the government, since you get to keep it, that's an actual return in itself. So this is going to give you a total ROI of 30.9%, which is incredible. That's why people are investing in real estate, especially turnkey real estate, because it's easy, it's lower risk than doing the work yourself, managing it yourself, and you can still get significantly better returns in the stock market. So you can also dive into the 10-year analysis because this is just year one. And that's what's really cool about the turnkey properties is because they're immediate cash flow. Day one cash flow, assuming there's a renter in place. Unlike some of our other investments that we have, like our apartment buildings, they don't kick off a return until year three. So big benefits here with the turnkey single family homes. So now we want to really finalize and make sure that the price is going to be correct. We have 126,900 here as the price. So what we recommend you do is go over to the MAR Data XMA 3UP report. This is an actual report that was generated because we're real estate investors or real estate agents. So it's auto-generated for us. And what you can actually look at is the price and the price per square foot. And so this is going to be the same method and the same strategy that an appraisers use. When you get an actual appraisal, it's going to look very similar to this because they're going to look at comparable houses. So one of the big questions we get asked is, how come your properties are priced over and above what Zillow has priced? And the answer to that is real simple, is because Zillow doesn't know if that house has just received a $30,000 renovation or if it has a leaky roof, smells like wet dog, and it's not even livable, right? And so because of that, Zillow is just more of an average. So of course our properties are going to be worth more because they're in better shape. And so every single one of our properties in this year, in 2020, has actually been, the appraisals have come in $2,300 over value. So that means you get some equity. We're not going to raise the price on you. That is your free equity. Congratulations. That's incredible. So the reason that happens is because we use the same process and strategy as an appraisal. So we find comparable sales, properties that are similar and also have similar price per square foot. Because at the end of the day, one of the biggest tips is that it's not about the price. It's about the price per square foot of the property. That's the final holy grail number that people are going to look at. So ultimately, you want to make sure that the property that you're investing in has a lower price per square foot than the comparable sales. That means you have the best chance of getting extra equity and having a high appraisal day one. All right. And then finally, it's great to look at the photos. When a new property comes out, you're really only going to see pre-renovation photos. So this is what we look at when we're doing our analysis to say, hey, is this going to be a good investment or not? We're going to add we already have the pre-renovation photos, but we're also going to add the mid-renovation photos. Once the renovations are done, we're going to hire a professional photographer to take professional photos as well as film a video. So the goal of this is to really just look at the bones of the house, right? To look a little bit at the floor plan and just to see, is it something that's, piques your interest? Because some houses have crazy exteriors. Some investors like that, some don't. So it's just nice to see where we started. So you can click and scroll through all these photos here, but as you can see with this house, it's really not in terrible shape day one. So then we go back to marketing And we have a few more documents in here. Next is going to be a welcome letter. It's a little bit more information about who we are and what we do. And then I highly recommend you dive into the purchase process email, because this is going to go into all of the details from start to finish. We just want to be fully transparent and make this as easy as possible for you. And then last but not least, here's another document that gets auto-generated that we have access to. This is the tax information from the city records. So down here, you scroll down and you'll see the taxes. You can see how they change throughout the years. The big one in Memphis that we've actually unfortunately heard rumors about some other investors that they only thought they would have to pay county taxes. They didn't think that they'd also have to pay city taxes. So here in Memphis, you do have to pay both. There are some honey holes out there where you do actually only pay county taxes. However, we may only get 5 of those a year. So want to let you know that you do have to pay city and county taxes. You can look at the data here, like the square footage, bedroom, bathroom count, year built. But once again, sometimes this information is wrong because it's only as good as the individual that typed the information in. So we get all of our information in person by actually walking the property. So there's no better way there. And yeah, that's it. So all in all, if you do think that this investment would be a good fit for your portfolio, what you can do is go back to the actual website and click the Order Now button. So this is going to be the financial addendum, which will allow you to reserve the property. Just fill in your information real quick. And whoever fills out this form first and is pre-approved with a preferred lender or is paying cash is the one that's going to get the property. So we do operate on a first come, first serve basis, and there is a timestamp actually on this form. That's why we created it, just so we could be fair. So once you fill out this form, I'll reach out to you. We'll send you the contracts. It's going to be contingent on home inspection, appraisal, financing. Once you sign the contract, we will sign as well. We'll send you a copy, and it's going to be called our purchase process email. It's the Holy Grail email. It's going to have your closing attorney, your lender, your insurance provider, us all CC'd in on one place. That's where you'll send in the $5,000 earnest money deposit as well. Then, since most of our houses are under renovation, you're going to really just wait until we finish the rehab. We will update you every week with the status. And during that time, we recommend that you work with your lender to make sure you give them any necessary details or documents that they request. Because the goal is for once the renovation is completed, to be able to order your home inspection and appraisal right away. So then once those items once you are 100% satisfied with those items, then it'll go to closing and you'll purchase the property. That's when you'll physically pay the rest of your down payment plus closing costs. That's when you'll own the house. Then we'll get you set up on the property management side. So we'll get you a property management agreement. We'll get you your own owner's portal so you can actually log in at any time with the username and password and see how your entire portfolio is performing. And that's what we're going to do. And then the hard part's over. Now you just get to sit back and cash flow and be more of an asset manager, kind of like the hedge funds do, to where we're going to send you a profit and loss statement every month of your whole portfolio. So you can just look at the income, the expenses, and then the bottom line cash flow that we're going to deposit into your checking account of choice. And if you have any questions or concerns about that P&L, well, you'll have one portfolio manager. They're absolutely incredible. You'll have their phone number, you'll have their email address, and it's their responsibility to answer all your questions and make sure that they will go into the management company to find the answer to your question so you don't have to. So hope that helps. Hope you enjoy the deep dive. Let me know what you think, your thought process, your feedback. Please make sure to hit the subscribe button. We'll be doing more of these here soon. Have a great day.